Awesome.
You had to wear the high heels today?
Sorry, really?
I'm like, I
short guy.
I don't feel short normally. I'm like, okay.
Yeah, oh yeah, go ahead.
All right. Everybody got a seat and food and drinks. Everybody say hi.
I'll click for it.
Smile for Kayla. Thank you for being here. We got the A team here today, don't we?
Yes.
All right, everybody from Oakley, raise your hand. No, Kimberly. Oakley, all right.
I live in Oakley.
Middleburg.
That's right.
Middleburg office, Byron representing. Anybody from Fleming Island? And/or Middleburg, all right. Back row, Orange Park. West Side. Yay, David and Joe. Did I miss anybody? Is there anybody here from another office? Oh, Watson Mortgage. Casey here to learn. Awesome. Well, we've got 3 experts in the field of renovation loans today here to speak with you. So we have Kayla Tyre. Obviously, you can tell which one's Kayla, right? She's with Fairway Mortgage, and she does the 203K, the lending piece of it. Mark Fiegel, he's one of our Watson realtors in Orange Park, but he also has a contractor's license, and he runs another business, Fiegel Construction. So, and then Nate Spalding, he's a 203K consultant as well as a home inspector, and they're kind of a team together. So if you have a customer that is interested in a property and you're like, this is never going to get financing, or this is not exactly what they want, it needs too much work, this is going to be impossible, and you want to throw that one in the trash, think again, maybe there's an opportunity. If it's in the right neighborhood, if it's in their budget, if it's all the things they want, just accept a few little things, maybe this is an option for you guys. So
Can you get Kelly to walk back in?
I'll text her. Yes, I will. All right, I'll text Kelly.
So we're going to kind of put a bunch of hats on today and talk a lot about the whole process. So we're going to kind of go realtor, lender, home inspector, and then consultant, and they all kind of bundle together in one big process. Actually, the 3 of us did my first one ever as a realtor and as a contractor at a house in Eagle Landing. We had a customer, could not find a house he absolutely loved, but he knew he wanted Eagle Landing, he knew he wanted a budget, and he knew he wanted a big house. So we found what I consider a junker. I mean, it had been roughly lived in, it had needed full renovation, roof, ACs, bathrooms, kitchens, top to bottom, we had to renovate the whole thing. The good part is the price was right. Kayla was able to help us out and get us in it. And I'm going to show you pictures of it from start to finish once we get back logged in. But that's kind of very important. It's hard to find your customer that perfect home. I mean, unless you build new, which takes 9 months. Or you find just somehow get lucky. The likely is you're not going to find a perfect home in the neighborhood, but they find some area they love and find something that works. The renovation loan to me as a realtor, now that I know it, super easy. I'll tell you on the realtor side, you need to really put a lot of energy with your customer. Understand what you're getting into and really let the experts guide your customer through the process. Because if you try to, tell them how it goes, it's going to be a hot mess. I promise you. Perfect. So this is a house in Eagle Landing that we sold together. Kind of give you a little quick guide of what it looked like to what we did to it. Then I'll give you a breakdown. So this is what it started as. Do you want me to turn the front light off?
It's behind you, I think. One of those might turn off that red light.
Is that better?
Yes.
So this is what it started out. This is what we turned it into.
Oh, that's nice.
Kind of goes through room by room. Converted over LVP, upgraded the bathrooms, showers. So to give you kind of an idea, this house listed for $420. I think we purchased it for around $425, something in that range. They put about $125,000 into it, so they're $550. House valued right now probably close to $625. So not only did they get their dream home because they picked everything in it, they also gained equity by doing the renovation. Kayla, do you want to tell them the process of that when we met Jordan and how?
Yeah. So Mark had been working with them for a little while before they came to me. Just couldn't find the right house. Everything was overpriced for really what their budget was, because this was about a little over a year ago.
Yeah, but, yeah.
Right?
The market was still
Yeah.
screaming hot.
So rates were on the climb. This was around March when we started. I think we closed in May. So we were able to lock them in pretty quickly on a really good interest rate before the rates skyrocketed. But they couldn't find their dream home. This house Mark found as an opportunity. He kind of saw the vision, right? And he pitched it to them and explained to them, you can get everything you want in the house you're looking for much less money than what you can buy an existing, already in it, or a brand new construction home. How it works, so we all had to work together. It took the whole team. It wasn't just one particular person. All of us understanding the process and being along for the transaction. So the first thing they did was got qualified to make sure that they could afford and qualify for a renovation loan. So we did their application, knowing kind of what the money, how much it might cost. Mark and I had the conversation of ballpark what we thought the renovation amount was going to be. I went ahead and gave them an estimate kind of on that proposed figure so they could see and make sure it was within their budget, and it was. So I gave them the estimate, got the house under contract. First and foremost thing, you want to make sure that no one else is out there trying to get that house from out underneath your customer, or a cash offer comes in and lowballs them and then you lose it. So get the house under contract. You can do the inspections later, right? We all know you can turn around within that 10-day home inspection period. If they do the inspection and the house is just way too much to do within their budget, then they can always back out. But in this situation, it was just really modernizing it and updating all the interior, and it was a really good house, had good bones. So got the home under contract. Next step was to do their home inspections, their due diligence. And they need to have their contractor go out there as soon as possible. Mark is great. I will say not every contractor is as great as Mark, because he's done this before. He understands as a realtor, and he understands the timelines. Some contractors take like 3 or 4 weeks to give you a bid because they love to do work. They hate paperwork, okay? So they do. Mark, he's actually really good at it. So having Mark go out there, he was also the contractor. He was able to go to all of his subs, get his prices. It does take 2 to 3 weeks to get that contractor bid back. So that's why we really stress up front 45, maybe even 60-day contract, because it does take a little bit of time for that contractor piece. And it's not necessarily always a contractor. It could be their subs. It could be trying to figure out with the supply chain issues that we kind of have right now, timing when that's going to come in and how much it's going to cost them, because by the time they get the material, the price could have gone up. So contractors are kind of struggling right now too, and I know Mark can attest to that, making sure they price a job right. But 2 to 3 weeks for a contractor bid. In the meantime, I'm already collecting all the documentation from the customer. Their loan is started. We can go ahead and get their file and underwriting and approved based on our preliminary numbers. As soon as we get the contractor bid, we will order the appraisal. So I cannot order the appraisal until I have the bid. And here's why. The appraiser needs to know what they're going to be adding the value to the property, what the after improved value is going to look like. Because that's the amount we're lending on, is the after improved value. So if they're putting in tile floor or carpet, if they're putting in Formica countertops or granite countertops, there's a difference in value in those types of improvements. So the appraiser really needs to know what's going to be happening, what's going to be done on the job to make sure to get that value and justify why we're lending, close to $600,000 on a house that's being purchased for $450,000. So the appraiser takes about 2 to 3 weeks. Typically, their turn times are pretty average, about 2 weeks to do their appraisal report.
Can I put the realtor hat on real quick?
Absolutely.
So when we talk about appraisal, this is where you guys come in. When you're walking through these homes as a realtor, you really need to educate them on what types of flooring they want to put in, what type of countertops they might want to upgrade to. Do they want to do bathrooms? Do they not want to do bathrooms? Because every time these products change, like Gail said, that lender has to, that appraiser has to know what they're putting in the home. So, and that contractor has to do the same. So it's really important to kind of, as a realtor, guide them to what they're going to want to do and be very, very 100% on it when you submit it to everybody, to the team here.
Yep.
Sorry, good.
That's okay. So just the loan process, I know we'll get more in detail, but just to finish as far as the process, once that appraisal comes back, if there is any question the appraiser has, maybe they find something that the contractor didn't address, like a wood rot somewhere that we might need to add to the renovation component. There is sometimes some back and forth between the contractor and the appraiser. It doesn't happen that often, but I always want to allow for time because I hate to set, I would like to set the expectation, right? I hate to say, we're going to get this done in 45 days, and then the appraiser comes back and we have to go back and forth with the contractor. You're talking maybe adding an extra week because the contractor might have to go back to a sub, get a new price, redo the bid, give it back to the appraiser, then the appraiser has to adjust their report. That back and forth can take a couple days. So I always try to estimate that added time in the contract to be able to close the loan. But once we get that appraisal back, if everything's good on it and everything matches up, the value's there, we will submit the appraisal back for final underwriting approval. By then, while we're waiting on the appraisal, we've already gathered any documentation from the borrower that we might need for final approval anyway, so we're not waiting, you're not waiting on your customer to provide those documents to us. Put it back in underwriting, you get the clear to close, and we go to the closing table. The work does not start until after the loan closes. So they cannot do any work on it, but that is when the work starts, is after the loan closes. I do work closely with a renovation specialist. So with every single loan, renovation loan that we have, there's a renovation specialist assigned to that file from the start. And they're the ones helping me communicate with the contractor, getting their insurance, their contractor's license, making sure they're licensed and insured to do business in the state of Florida. You don't want to hire a contractor that's not licensed. They're also helping me make sure I get, if I need Nate involved, any information from a HUD consultant. And they're really helping manage the renovation part of the loan from start to finish. When the loan is done and the contractor wants draws, that same renovation specialist that's familiar with the borrower and familiar with the contractor and familiar with the HUD consultant, they are involved through the draw component as well. So you're not having to have somebody that's not familiar with the loan to go to. I'd like to tell you from experience and working with Mark, it's one thing to have to go to somebody else that you don't know and try to get paid on the job. So we have the same renovation specialist that's assigned to the file, also helping with the draw schedule. Some lenders do hire it out to a third party. We do not do that. We do it everything in-house. So that's very, very helpful. But that's the loan, the process from start to finish. So can't order the appraisal until after we have the contractor bid. Just keep that in mind. Get the contractor out there as soon as possible, right away, up front. And then the appraisal, once that's back in, as long as everything's good, the value's there and supports the renovation, we can go to closing. It's really not that hard. It's just working with somebody that knows what they're doing on the loan part of it, the contractor as well, and knowing when we need to get a HUD consultant involved. In this situation, we did have to have someone involved. It went very, very smooth.
Yeah, and Nathan does a great, from the realtor standpoint, these guys did a phenomenal job. It was smooth on my end to close it. Now, construction side, that's a whole different baby, but on the realtor side, here's my advice on this too. When you guys do these, don't be afraid of it. They're a little bit more work involved, but your customer will be 10 times happier when they're done because they're getting ultimately a new construction home for a fraction of the cost. And work with these guys the whole process. I advise you be involved with this transaction until the construction is final. And that way, your customer will love you for life because they're going to go through a lot of stress. And trust me, it is a very stressful start to finish process. And especially with shortages and labor shortages, it's bad. Where do you want to go next? To consultant? How do we
So,
where do you?
Well, I was just going to say real quick, whenever you're going out to show a home and you find a home that they fall in love with, location or the home itself, and it just has outdated kitchen and bathroom, even something simple as that, That can be a 203K. That's all it takes. If they want to add a pool, that's 203K. That can be done. Everything can be taken away except for the foundation. It can be a 203K. So just think of it at that point. There's really nothing that's, unless it's, I can't go more than 4 units if you want, if they want a quadplex. So we won't, that's a little more dramatic there. But as a realtor, just remember this. When you go show a home, you're trying to look for different revenue streams. When you show a house, you never know which one's going to spark the interest of the buyer. So whenever you're there and you see something that you think, oh, they really like this house, but you know what you do? You have Nathan come over, because what I will do is call them, meet them at the house, see what their thoughts are and what their needs are with you there, if you like, which I love. I mean, I love the communication. So us being there together going over this helps us know exactly what they're looking for. And at that point, once we need to know numbers, I can give them estimated numbers myself just from doing the work. But I always tell them the hard numbers come from this gentleman here. And I have 75 GCs that I work with, and not just because he's sitting in here and he's bigger than me, but this guy here is the best that I've worked with. Okay, smooth process, no issues with anything along the way. He can work a computer, which if you work with GCs,
Yeah.
that's already a miracle. So it's so really a plus to be able to work with somebody that's actually articulate as far as that goes. So,
And we bring it from a realtor standpoint too.
so that helps a lot. Just having communication, knowing that you can work together as a team makes a big difference. But anyway, I'll stop there for now.
I do have a question.
Yeah.
So anyone that requires, say the potential buyer wants the home to be updated, it qualifies for the, as an FHA product, that it can qualify for an FHA 203K loan?
Yes. So so I'll get into, we kind of just wanted to give you like a brief overview, but I know we'll kind of get more into detail, nitty gritty, so on the actual specific products.
Okay.
Yeah, so there's FHA, conventional, and VA. You can do renovation financing using any 3 of those types of financing. Now the guidelines for each type of financing is a little bit different. It varies from FHA to conventional to VA. But yes, and now they actually just started including mobile homes. Mobile homes were not eligible property types to be able to renovate, but now they are. They are limited on how much you can you have to be careful, because I mean there's some that are just older. Anyways, but you can do that now. In VA, they just increased. They did have a limit. You used to be able to only include $35,000 in repairs. They just increased it to $50,000. So I mean, you really couldn't do much with the cost of everything today at $35,000. Maybe a new roof, new AC, simple like new flooring or something like that. But you couldn't do a big project if you needed to with $35,000. So that increasing it to $50,000 helped. But your question, yes, you can pretty much, if whatever the borrower is qualified for. So if maybe they have a 620 credit score and they only have 3.5% down payment, then they're going to have to go FHA. And on FHA, depending on which, there's a limited and a standard program. So there's 2 different types of FHA programs, depending on how much the work, how much it's going to cost, and then also depending on the type of work that needs to be done. We'll determine which FHA program we do, and I will help determine that. You don't need to worry about that. But they can do anything structural. They can do. I mean, Nate can attest to it as well. I mean, if it's just, I don't know, they need new appliances. Maybe the house is really nice and it doesn't have any appliances, but they don't have the money. They only have the money for down payment. You can finance appliances as a renovation loan. So like this is going to open the door for you to help sell more homes that maybe people, because let's face it, there's a whole world of, there's a whole slew of borrowers and customers that cannot afford to buy right now because homes are not really affordable. They continue to go up. So this might make homes more affordable for that group of borrowers that can't, or home buyers that can't afford it. And homes that are not nice, right? That can't be financed at all, or maybe they're your listing and you don't know how to advertise it because it's as is or cash only. We do have flyers we can put in your property with the pictures of the property on the flyer. I can show a sample renovation loan on the flyer so potential buyers that come in can look and see, oh, I can actually finance this house with a renovation loan. So it'll help you be able to sell more listings as well. And if you ever wanted to host an open house and have somebody come in and help you with like on a Saturday in a house like that, we would be more than happy to help you list that house and advertise it like that. But that just just to kind of go over some of those details. But I don't know if is it my turn? Is it my turn?
Just keep
Okay.
going.
I'm good to the construction side, so.
Yeah, go ahead, Amanda.
So you said up to 50,000, but those people spent 100,000.
They went conventional, so, and that,
okay.
not that, but the pictures I wrote there earlier, they were conventional. So I can kind of go over in a nutshell, and this, again, it's my job. I stay in my lane. You're the realtor, I'm the lender. Mark's the contractor, Nate's the inspector. So I stay in my lane and I'm the loan expert. And if I need to rely on any one of these guys, I will call them and ask them. But again, like I stressed earlier, it's all of us working together. So for the loans and what options are available, I mentioned FHA. We said there's a limited and a standard version. The limited, you can only do up to 35,000 repairs. So maybe this is just, it needs a new AC unit, has some wood rot, seller's not willing to fix it. Just as an example, some small items. This FHA limited is going to be perfect for them. Because those items are probably going to stay under 35,000, and there's minimal involved other than just a contractor coming out and giving us a bid on those required items that need to be repaired. 3.5% down of the total purchase price plus improvements. So on all of the loans, the down payment is going to be based on the total after improved value or after improved total number acquisition price. So a $200,000 purchase, $50,000 in repairs, $250,000 total acquisition price. It's going to be 3.5% down on that $250,000, or on conventional, it'll be minimum, if they're a first-time home buyer, 3% down. If they own other property, minimum down payment is 5%. And VA renovation, it's 0. It's 100% financing up to the acquisition price. Now, one little trick with FHA, you can finance 110% of the after improved value, the acquisition price. So let's say the appraisal came in a little bit low, $10,000 low, as long as the loan amount doesn't exceed 110% of that value, you can finance that home still if it came in low. So FHA is the only one that will let you do that because they recognize that this home is going to be appreciating in value. You're going to be updating it, and they want to put people in homes. So that's a trick with FHA. And sometimes I've actually had to flip a loan from conventional to FHA because the appraisal came in slightly lower, but it made sense for us to go FHA, so we did. 1 to 4 unit, so you can buy a duplex, a triple, or a quadplex, and that customer can renovate all 4 units, or if it's just one side that needs renovated, and they maybe want to just do the other 3, if it's up to a 4 unit down the road, and they want to, as long as they live in it, they can do it as an FHA. Same with conventional, but you don't have to live in it on conventional financing. You can finance an investment property as a renovation loan. The minimum down payment is 15% down on an investment property. So if you have an investor out here, they have cash, they're looking to purchase maybe a duplex or a 3 unit or 4 unit, they can finance it with conventional. Let's see. There's also the Freddie Choice renovation loan. That's something that's a little bit newer. So it's the same as the conventional, the Fannie Mae. It's just instead of using the Fannie Mae product, we're using the Freddie Mac product. And Fannie is a little bit more higher credit worthy borrower. Freddie's, if they can go conventional, but Fannie won't take it. Maybe Fannie doesn't like it, then we can go Freddie. So still keep them on conventional. But I'll tell you, just in general, because of where FHA is right now, and the government just recently announced that they're lowering mortgage insurance for FHA. If they're going to be in that kind of that risky category where I have to go Freddie, FHA is going to be cheaper anyways. I would tell them in the long run, it would be less expensive for them to go FHA because The cost of mortgage insurance is going to be much higher on Freddie, and they are less down payment with FHA. So, and interest rates right now are a little bit better on FHA, on government financing than conventional financing. So, but that's just kind of the financing. Again, I will help you determine, you and your borrower, which one they can do. This is really neat. There is a HUD 100 down program. So if you don't know about this, if it is a HUD-owned home, so it's got to be a HUD REO. These are the ones that go to auction and you see online, and you have to go to, through the website and bid on it, and you can't talk to a realtor or somebody in person. That's these kinds of properties. If it is a HUD REO property and it needs renovation, and your borrower wants to brave their way through renovation on a HUD-owned property, they can with a $100 down payment. So they do not have to put 3.5% down. If it is a HUD REO property, $100 is the minimum down payment, and I have done one.
What kind of craziness is that?
No, they will let you. Just have to. You have to. I didn't hear you, but I'll ask you again. You just have to. I have it in here, so you can keep this. You just have to, in the contract, specify when you're submitting it that it is going to be a HUD 100 down 203K, and the seller, so HUD, they're going to look at that kind of at your offer over some of the other ones, because they want these kinds of properties. They want these kinds of loans. They want it to go to somebody who's going to live in it and own it, because they want to encourage homeownership, right? They'd rather somebody buy it, fix it up, and live in it than an investor come flip it. So make sure in your contract that you're writing that it's a HUD 100 203K.
Do you have to live there?
And
They do have to live there.
You'll get preference maybe over the cash.
You will get preference.
That is killer.
So, yeah. So what you were asking, I heard you.
No, I
You're
was
just like in shock about that?
Yes,
I knew you guys would
that's
love
a-
this. This is awesome.
that
This
is-
a little
that
nugget.
is
I have
amazing.
done one. And so it was a police officer a few years ago, but he found a home downtown near Springfield area, and he was able to buy it with a $100 down payment, did a renovation on it. I don't know if he lives there anymore or not, but he did it. So that's the HUD 100 program. And then there's also, this is the 203 repair checklist. Go ahead.
How long does you have to live in the HUD house?
Well, I mean, you could sell it 6 months later, but if you could, if you wanted to. I mean, I don't know why you would, but you could. It doesn't necessarily mean it's in a bad neighborhood. It just HUD foreclosed on it.
Oh, yeah.
So, but they do have to live there a minimum of 1 year, and then they can rent it out down the road. But yeah, there's this 203K repair checklist. So maybe you're going through, maybe you have a listing and you're wanting to know what kind of financing you can do. If it's on this, if the damage or whatever to the property is on this list, it's probably one that you're going to have to advertise as cash for as is, or as a 203K. So, or if you're just walking through a home with a potential customer of yours that is interested in a house and you already know it has visible mold or electrical fixtures that are missing, you can say, yeah, this is probably not going to go FHA, but I know a person that can do this financing. If you love this house, let's talk to her. And this is a really good resource for you guys too. So, any questions for me on, yeah, Amanda?
Do you have to bring the house up to what we would consider normal FHA standards? Like in the renovation, it now has to have all the appliances and none of these other things?
Yes, so I rely heavily on the contractor because I'm not looking at the house, and I rely heavily on an inspector. They're gonna know exactly what needs to be done to the house to get it to standard. So I heavily rely on them when they go through the home with you and your customer. But like, there's some things that the customer can do themselves, like they could paint. If they have a budget, I'll go over that with them. If I know they're only approved to a certain amount, they can do some of the work themselves. We won't finance it in, because I can't finance self-help. So all the work that's being done, that the money is being used for, has to be done by a licensed contractor. But if it's something that doesn't require repair for the appraisal, they can say, okay, Mark, I'll paint. Sorry, I'm not going to hire you, but I can do the painting. I have a budget, so maybe Mark won't put that in his budget. And I also wanted to mention, I forgot to, that we build in a contingency. So I go over all this with the customer as well, but in my example earlier, when I said a $200,000 purchase and $50,000 in renovations, if the house is foreclosed and no utilities are working at all, we do a 20% contingency. So that means on the $50,000 in renovations, we're going to add $10,000, that's the 20% contingency, to the loan amount. Because what if they go in, break into a wall, and they find that there's more damage that they need to fix that wasn't accounted for on the contractor bid, because they can't see what's behind walls. So that contingency is there, that if they need to use it to fix the house, they can. If the utilities are all working properly, then we only ask for, we only put a 15% contingency. And if they don't use that money, so at the final draw, when we pay the contractor, if whatever money they did not use on that contingency goes back to principal. So they're not going to be paying for it forever, and it's not money that's just sitting there wasted. It'll go back to principal, and they will not have to pay for that. So, yes.
You can be on any property.
So when you say like any property.
Well, I have two off-market listings right now that need renovation.
Mm-hmm.
So one's, looks like you walk back in time of 1975, it's got the green shade carpet and everything.
Oh, yeah.
So I
Brown
was wondering,
sister.
could I advertise it as a 203 renovation loan project or something like that in the MLS?
Yes,
Okay.
you can. That's a perfect house. I mean, it needs material update and maybe even other, updates to get it to where it's financeable. But that would be a great way to advertise it, because homes are staying in the market longer, and to make it. And if they're priced right, and that you've got to add at least another 50,000 in updates, and it's priced right, then somebody will definitely think about that and want to buy it for sure. Yeah.
Thanks.
Is that a normal time frame, like you have for this house with the renovations to get done?
I think so.
You mean like
Like
from
time
start to
Start to
finish?
finish?
Yeah.
For the
Yeah,
person to
now,
Move into it?
so when I said, I'm going to kind of skip ahead a little bit on this one, but like I said before, make sure your customer knows everything they want, because if they change one item, and I got to resubmit, and we'll show you when we talk with Nathan, if I change one item and have to go resubmit a bid to the underwriters, it's about a week to 2 weeks change order time frame. I always say 2 weeks to be comfortable, but likely one change order after it's all submitted will take over a week to get you back on track. So every one of them is a week and week and week. So this one was pretty good. We didn't have too many changes, and I was on both sides of it, so I kind of moved it faster.
So with a 60-day contract, you can pretty well get everything done that you needed to get done?
So 60 days is to
Close it.
put it under
Close,
contract and
okay, I
close.
got you.
They get
Okay.
6 months on conventional and FHA, up to 6 months to finish it. On FHA, it has to be done in 60 days. I believe it's 60 or 90.
They're fast.
Yeah, 90 days, that's right. So VA, they will not let you, because they want to protect the veteran, they will not, ask you to do it in 90 days. But FHA and conventional is 6 months. Yes. Good.
So they start making say you close in the month of May, would they start making their payments the 1st of July?
They can, or you can defer payments on conventional if it's a huge project and they can't live in there, and they are maybe renting space out and they can't afford to float both mortgages, they can defer payments for up to 6 months. But we finance the interest, so that 6 months worth of interest that they're deferring payments, we would finance it into the loan.
Pay it out of escrow?
Yeah, so they don't have to come out of pocket for it necessarily, we would finance it in. Yeah, go ahead.
What's the interest rate for these loans?
So currently, they're about 0.25% higher than what you'll see for someone not using renovation. So right now, you're looking at like high 6s, maybe even 7% right now. On VA, probably more like 6 1/4, a little bit lower, but VA's, yeah. I mean, we're telling everybody, which I know you probably are too, just get the house, you can refinance as soon as rates drop, but you're looking at about average 6 7%.
Another question is about writing an offer.
Mm-hmm.
There's a lot of contingency I'm seeing on this type of offer. One is the inspection period, typically is 10 days. Now you said that the contractor bids takes 2 to 3 weeks. So if I'm on a listing agent, I got this offer, there's a lot of inspection period, and then you have a contractor bid, another contingency, and then you have the loan. So what's, for Mark, I think you have an experience on this, how do you write it off?
So-
Be attractive to the listing agent.
So what I would do in your guys' case, if you find a house you love, you know it's gonna need renovation, keep a contractor in your back pocket. I know we can come, me or my partner can come over pretty quickly, within usually a day or two. I can give you a ballpark within probably 10% on site. So if you tell me I want to do bathrooms, kitchen, we have pretty much standard pricing for most of that. We have a ballpark what they cost. Obviously, if you add a $6,000 fixture, I can't figure that in. But if you go standard kitchen, standard bathrooms, we know about what it's going to cost. Same with flooring. So we factor that in and go, all right, you're looking at $60,000 on top of this. Here's what we think it's going to be. So we can do that within 2 days. Now, the finalized bid is, as long as you're comfortable with that first initial estimate, once it's finalized, then you're kind of stuck. But I would say have one in your pocket so you know pretty quickly how much it's roughly going to cost you.
Yeah. You could look on MLS, right? Look
What
at
do you mean?
pictures.
Well, like,
Like,
if
Mark,
you're
we need a roof and look at this MLS and change
Yeah,
that
if you're-
kitchen, change that bathroom.
If you're in your 10-day window, if you call, if me specifically, if you call me and say, hey, Mark, I got one we want to do, and you say, I'm in my 10 days, we'll come pretty quick. Now, we're not going to likely get you the full bid in 10 days, but we'll get you in there and get you an idea. Yeah.
For me, the risk is for the buyer, because make sure, as a listing agent, I want to make sure you close. Because I don't want a contract to fail because you didn't qualify. Because you offer like 400,000 and the renovation, you only qualify, for example, 550. The renovation end up 625. Now the contract's gonna fail, right? Because they won't qualify.
Well, you'll have a loan contingency period in there. I mean, so if we wouldn't approve them, we would decline them. If it was something like that, we would give you a decline letter so they could cancel the contract. If they don't qualify. If the cost of the renovation is too much, we'll say they don't qualify. Like debt to income or whatever it is. So we would work with you on that timeline, but any repair, like you really wouldn't do any repair negotiations with the seller because probably everything that you want to fix, you want to fix it. I want to fix myself. If I'm renovating a house, I don't want the seller to touch anything. I'm going to fix it all. So maybe I'm going to just use that 10-day inspection period to do my due diligence to make sure that this house has good bones. So I'm calling Nate, which he can talk more about that in a little bit, but I'm calling him to come out to do the inspection. And within that first 10 days, I'm going to know whether I want to tackle this project or not as a borrower, as a buyer. Because, like I said, I want to do all the work myself. I don't want someone else to do it. And if the house is not going, we know, talking to Mark within a couple of days, if it's going to be way out of budget, you can cancel. But you're really not going to be negotiating any repairs with the seller at all. Maybe you have to use that opportunity to say, hey, your house is overpriced, and there's about $15,000 of repairs that I'm going to have to add in. Just, whatever. I want you to come down on the price, $15,000. You can use that as an opportunity to negotiate the price at that point. But we'll help you. We won't let it go out of contract, out of contingency at all.
I think Rudy's thinking about from the listing side too, how do you make sure that this thing is good from the start? Because like our NEFAR contract doesn't have a box to check for a renovation loan. We would just be checking FHA, but we should write on there somewhere like additional terms. This is a renovation loan. And then as a listing agent, we should request a pre-approval, not for 450, but for 600 or whatever the top number is. Make sure they're qualified for that and then some.
Yeah.
That's a good.
To feel better about the seller moving forward
I
with
mean,
them.
for our case, when I did the one in Eagle Landing, there was a full transparency that house needed renovations. It wasn't a question, is it a great home that's move-in ready, but they want to add?
Nobody wanted it.
This one had to be added to make it livable. So I guess it kind of depends on the house, on the real estate side. If it's a listing agent, I'd be like, my house is nice, why are you doing a renovation loan? That's that's really a conversation you got to have with a buyer's agent. A little bit different, but like his listing, he's saying is full renovation needed. And you're gonna know that going into it, that you're gonna have to accept that kind of financing. So now let's talk about, let's switch over a little bit. So, as a realtor, so I'll go back to the realtor act. We buy the house, we get under contract. Now we're on our 10-day due diligence. We call Nathan. Nathan comes in and does two parts to this. He'll do your home inspection, WDO home inspection, wind mids, all that, 4 points. And then he'll also go over the whole consultation side of the renovation process.
Right, first of all, great, Kayla. I learned something from everybody, and that's the way we should all be. So that's really great hearing things like that. What I do is, I'm a home inspector. Okay, that's where I started in my business. Of course, I've done many things before that. I was born and raised in Jacksonville, lived here my whole life. Family business, I've done commercial property management, commercial maintenance, and I do home inspections, and I'm a 203K consultant. If you look at the brochure real quick, I just want to go through this fast. I know it's not 203K, but this is what I do. The left-hand side is the package that I put together for buyers when they go to buy a home. So everything on that list comes in my package. That package, including WDO and a free re-inspect, is typically between $500 and $600. Great package price. Everything on the right-hand side, we can do any of it individually, but the right-hand side, you'll see I have some of them highlighted there. FHA certification foundations. Kayla mentioned modular manufactured homes, excuse me. Those, we actually do the certifications for the foundations now for lenders. So that's something that I do. And we also do the 203K consulting, which is why I'm here. And another one that I'm doing, which I just started this program, was a pre-list consultation. I'll actually go into a home and do a quick walkthrough, send you pictures from the house and a list text of items that any inspector that you use would call out. Okay? And I'll do that for $200 instead of the $400 pre-listing inspection, which is a full inspection with report. But I can go into a house in 30 minutes, I can pretty well tell you, Mark would be the same way, this is what needs to be taken care of. It's going to be called out just like that. There'll be little things when the inspector comes in, but it will save you a lot of time, especially listings like the gentleman in the back. You know, your listings, if you need that done, that would help you a lot whenever it goes to sell. Amanda mentioned items that have to be done to make it past FHA. It's called minimum property standards. Minimum property standards have to be met on every job that we do. Now, as a 203K consultant and an inspector, I actually know when I inspect a house, I will call out anything that will not let it pass appraisal. So the MPS, I call it, minimum property standards, will be met before I leave. Now, a lot of them are very obvious. You can't have openings. You got to have heat and air. You have to have an oven. No holes in the floor. You got to have a roof. It seems simple, but there's a lot of other items. Trying to think of some other questions. She hit on so much that I'm trying to keep up. As far as the process goes, I want you to feel comfortable when you go to a home to do an inspection, or excuse me, to do a showing, and you have the client there with you. Never think that something can't be sold. Any property can be sold to somebody with the right situation. Whenever I go in and do the inspection for you, we're doing all these different items. We're making sure there's no termites. We're making sure, you know, what the situation is with the home. One thing that I do as a consultant is, yes, we charge the package for that, but even better than that, if it's a renovation property, we will actually do the feasibility study at no charge. That's included in my inspection already. So I don't have to go back out and inspect it again. That's what that normally would be. So if you had another inspector inspect it, then I would have to go out and do a feasibility study on the home because I would not be familiar with the home. I can't just go by their report. So us doing both saves them $400. So us doing that, so once we do that, we go in and do the feasibility study. At that point, you don't have to worry about numbers as far as what they may cost or this or that. I wouldn't get into that with the buyer there on site. I may be overstepping my bounds here, but just thinking out loud. But really, I use my numbers that I have, and those numbers I tell people are not the numbers. The numbers come from the GC. Until we get those numbers, then you know what she will have to work with when it goes to closing. And just like Kayla said, they got 6 months to do the project, to complete it. Not many of them make it 6 months. Usually most of them are before. I've had projects where they've just done just a pool. It was a $125,000 pool, but just a pool. And they've done it where they've just done the kitchens and bathrooms. I've seen them all. Right now, I have 21 projects going on at this very time, 203Ks. So they're very popular, they're being done, and so whenever you hire me to do your home inspection, you're hiring somebody that also is a consultant and a renovation specialist that's able to go in and look at the property from different set of eyes than just inspection. Because as a family business, my sons and my nephew inspect with me. I usually have them there doing the inspection on a potential 203K, and I'm there walking around looking at what's going on, and hopefully have the buyer there with me saying, what do you like about this house? What do you not like? Because on a 203K, you have mandatory, you have recommended, and you have requested. Okay, so the mandatory is the minimum property standards. The requested are things that I would request that I think you may want to do. And then the client will actually has their choice of things that they want to. The kitchen looks fine, but they just want to update the kitchen or the bathrooms. They don't like the light blue tile or whatever may be in there. And so that's something also that we're able to to do while we're there. I like to walk around with the client to get their needs, and then I can formulate the feasibility study and get that over to Mark so you can get you real numbers. At that time, then you'll know as far as the writing the offer process that you're able to do. You'll have numbers, and I made that happen quickly. I don't waste time. I'm somebody that, if you look at my phone, there's not an email on my phone because I finish it and get it out of the way. So whenever you look at have me do something, you won't have to be calling me looking for something or asking for something, whether it's inspection or whether it's anything. I communicate, and that to me, being in business myself since 1985, different businesses, my life has been run on communication and customer service, and that's what we all work toward. Now 203K inspections, right now the market's not that hot, so 203K is a very good alternative when you're going to show homes that are not quite as loved homes as others. And I've seen some that like I said, are in very bad shape, that once the guy gets the 203K and the guy starts to work, I open the door up, all I see studs. I mean, nothing left. I mean, totally gutted. One in McClenny that way, and it turned out to be beautiful. I mean, top to bottom, they renovated it, and it turned into a beautiful home. The one Mark had photos of there, I mean, you wouldn't know it's the same house when you walk inside the front door. I mean, it's really amazing what these guys can do that know what they're doing. So it's very important when you're with a client, and hey, I got Jim Bob, my buddy over here, can do the work. He's a contractor. Please be careful of that. Tell them, don't deter them from looking at getting a house, but say, let's get bids from other contractors. Say it that way, because you want to get bids from contractors that I'm familiar with, because not all contractors are the same. Some I would let build a house, others I wouldn't let build my dog house, is what I normally say. So,
and one key on that, so if you look at my card has a CRC license number. There's only 3 legit contractors in the state of Florida: CRC, CBC, or CGC. Those are the only 3 state licensed to build anything residential.
Where's your card?
There's a bunch all over. I pass them out to everybody. But those would be when they say I'm licensed, they might be City of Jacksonville licensed, but they're not necessarily a legit contractor.
right, exactly. So that's why and also the lender vets the contractors, and and I've worked with a lot of them. So like I said, I'm going to be somebody that's loyal to my people if they're loyal to me. If they do good work and they take care of my customer, I'm going to take care of them. I mean, that's just the way I am. So that's the way I do business. Now, a lot of this, Kayla's already hit on. She covered everything very well. So the climate's changing in the home buying market. I'm just going to scan through this quickly for time, because I'd honestly rather answer questions than go through a PowerPoint. But mortgage qualifying is harder than ever. More people focus on distressed properties, which is what we're talking about. Appraisals are stricter. And overview of the FHA products. FHA mortgage usually refers to the 203B loan. Most banks and lending institutions offer this insured loan to clients who don't meet qualifications for the conventional loan. 203 loan benefits, no credit score requirement, so less than perfect is okay. Only 3% required down. Seller can have an assist allowed up to 6% of the purchase price. If they have a 6%, right? If they have a family member that wants to gift them money to help them get into it, they can do that. So of course, go to your lender here,
Ready?
walk you through that.
Yeah.
So next, please. I'm gonna go through them quickly. 203K challenges. Lender can, it usually does, impose their own minimum credit score requirements. Interest rates are generally slightly higher, which she mentions like 0.5%.
About a
Quarter. But you think about it. I mean, you know, I know we're spoiled the last 3 or 4 years, 3% interest rates or whatever they were, 6%, that's still low. I mean, really, in the housing market. I mean, it's still a good rate, so, you know, don't let that detour, you know, anybody looking at these process. The house must pass FHA appraisal. There you go, minimum property standards have to be met, and that's my job when I go out to make sure that all that is met, there's no issues with that. 203 rehab mortgage, same benefits as a 203B with one big difference. FHA requires repairs are corrected after settlement. I know she already said this, like I said, but after the closing, then the repairs can be made. So that's whenever that's taken, that takes place. One thing that she mentioned was the contingency. The contingency is used a lot on home renovations. I have one in Springfield right now that's going on. I have one in Avondale that's, the renovation part's $400,000, okay? I mean, it's like change order after another, but the contingency is used for those change orders. And it's just adjusted in the end for the principal of the loan once the project is finished. So let us handle those details when it comes to talking to the client. When I do my walk-around feasibility study, I'll answer any questions they have. That's what I love to do.
I can tell you, I've done 3 loans with Nathan, and all 3 of them have used the contingency.
Right.
Guaranteed.
Most of them do. I mean, you're just going to have things that come up.
Every
I
single
mean,
one of mine have used it.
yeah, I mean,
Is that the extra 20%?
That's the extra,
whether it's 10, 15, or 20, it's based on
'Cause you'll-
situation, whether it's structural or,
You'll always get into a project where they want something else while
Well, they
they're in
change
there.
their mind, yeah,
Yeah.
people, you know.
they came in with the lowest grade, client says, now I want the,
Yeah. I want basic
you know,
grade and
the big
not
giant
quartz.
refrigerator, you know, so everything changes, you know, that's fine. So that's where the, you know, the contractor comes in on that. So Streamline, she mentioned, I think, what'd you call it now? Is that? Simple?
Limited.
Limited, okay. They call it Streamline, they used to.
Yeah.
So we're calling it limited now. So the minor repairs and improvements, repair costs up to $35,000. No minimum repair threshold, repairs completed after closing, same down payment required, and no inspection is required, less than $15,000. And you don't have to have, well, here it is.
Oh, sorry.
Streamline benefits continued, that's fine. No 203K consultant has to be on the project, but honestly, once it's around 25, 30, most of them have a consultant, just to make sure it's done right. Lenders want to make sure they have somebody on the project taking care of their interests, they don't have to worry about it. No GC has to be on it. I'm sorry, I'm going to use the GC so I know can do the work right. That's just the only way I do it. Any FHA approved lender may originate a Streamline 203K mortgage, but we have one here, why go anywhere else? All right, Streamline, what can be included? Total cost of a rehab, your inspection fees, your building and other permits, title update costs, and eligible work items. Can replace almost anything on a 203K renovation. Like I said, as long as the foundation remains, you can do the renovation.
Sorry, I wanted to go back one.
Can everybody silence their phones, please?
Go ahead, go to the next.
I have a question.
I'm just rambling.
She was taking a
anyway.
picture, sorry.
Oh, I'm
Quick
sorry.
question. So, as long as the foundation, do you deal with, what's it called, the subfloors or the houses that have crawl spaces?
Cross space, yes.
You deal with that too,
All-
right?
all the time.
Okay,
Yep.
okay.
Springfield, I mean, the north side, up off of, Florida, Ribault Scenic, got
Gotcha.
2 or 3 going on up there right now. I mean, yeah, all the time. Yeah,
Copy.
bunch of them.
Thank you.
Yes, sir. The eligible work items are, I'm gonna let you read some of these instead of just going through it. It's just a list of things that we basically have already mentioned. appliances, exterior painting, and, you know, you got a 2 or 3 story house in Springfield, you know, you might want to get somebody else to paint it than yourself. I know Kayla can do it, but that's way up. So you want to make sure that, you know, one thing that either Mark or Kayla mentioned was, whenever you have a project and we go through and do the feasibility study, get everything done, all the paperwork done, there's 35 categories on the 203K work list. And once we get all those numbers, hard numbers from our GC, you want to try to let the borrower know, let's not make changes or come in and try to do any work yourself, because that just turns into usually a hornet's nest. Because everybody wants to try to do things themselves to save $1. Let the person that know what they're doing do the work. I mean, that'd be like me trying to do a loan. She does a loan, I don't know, and I don't do that. Yes, ma'am.
So if someone, say, can paint themselves, they need to wait till after they close, right?
Oh, yeah. Yeah.
Right, but-
Wait till later.
Correct, we just won't have it in the list of work to be done.
Yeah.
And you can do it
So
yourself.
anything-
Main thing is have a communication with that GC. Say, okay, yeah, whenever you get to this point, I want to paint, and he needs to allow a week or 2 or whatever for you to paint. I mean, you know, just coordinate, communicate, that's the main thing.
So I can tell you from experience with these, I've had 2 of the 3 homeowners said, I want to paint. One of them now is going to continue to paint
Please
half
paint.
of the house. But reality is, if you tell me to stop, I'll do anything. If I'm one of the contractors, if you've got your own kitchen guy, I'll coordinate with that kitchen guy. Same with bath, or if you have someone you want to use, as long as they're appropriately licensed, I'll work with them. But when it comes to me subbing in and, you know, you want to paint this week, be on the understanding that you might not get me back for 3 weeks after that.
It'll slow you down.
Because I have a schedule I'm trying to keep, and I have subs scheduled, and let them know, say, you might not get them back if you try to do some of this yourself. It's
Right.
tough.
It is, yeah. So that's why it's better, if you can, to let them, just let the GC do his job and complete it. And I'll talk to them about it through the process in a way that's, you know, please, you know, you're doing the project, it's gonna look beautiful when it's done. I got hundreds of pictures I can show you of projects that I've had completed. They're gonna be happy when they're done.
And keep them good. These are all eligible.
See if we got any more, go ahead.
Ineligible.
Ineligible items, okay. New construction, including room additions, repair of structural damage, landscape, any repair or improvement requiring more than 6 months. Go ahead and go to the next one. Just slip through here. This is a good slide, so if you want to take a picture, this is a good one. Full 203K versus the streamline/limited. The 203K must be at least $5,000 in repairs, consultant required, architectural exhibits required if necessary, and borrower can do repairs, improvements if qualified, is what we were talking about. The streamline is only for uncomplicated repairs and improvements. No consultant is required, no architects required. Borrower can do repairs if qualified, and it's up to $35,000. See what the next slide there is. Okay. Borrower must use licensed and bonded contractors. Self-help is discouraged. If the borrower can sufficiently demonstrate to the lender that he has the necessary expertise and experience to completely perform the work, that's what you want to make sure of.
Here's a good question for you guys. I'm going to ask it from this side. If, for instance, Amanda and I were buying a renovation loan, could I do my own work as a licensee?
You can, if with approval. So you can, in certain situations, I want to say on FHA, no, but on conventional, you can. So we just have to get it approved. But yes. Now, so what I will tell the buyer and the contractor, because they're one and the same, right? If you know a really good friend of yours that's also a contractor, run the numbers, see if they're willing to let you run the renovation through their business. And typically, most contractors know somebody else, and they'll have someone help them do that. But you can in certain situations.
That's what I've been telling people. Just tell them to be transparent. That's the
Yeah.
main thing. And let the lender make the call so everybody's
I mean, they
knows
want to
what's
save
happening.
money, and that's totally
Right.
understandable. It's just kind of like for a conflict of interest. And our job is to make sure we want to make sure the work's being done and it's being completed. So when we vet the contractor and we have the homeowners sign off whenever the contractor wants money, the homeowner signs off that the work's been completed, We also have an inspection done, so Nathan is one of the inspectors that goes out to make sure the work's been completed for what the contractor wants. And then the contractor also signs off on it. So when the homeowner and the contractor are the same person and there's no inspector involved, like Nathan, then, you know, we don't know if the work's really been done and they're just wanting to request money, so that's why it gets tricky. So in this situation, I believe because you're the realtor and the contractor,
Yep.
was why we had to use Nathan.
I think I was the realtor.
Yeah,
I got
well, you
paper.
were, but you're married.
Yeah.
And we knew that. So in that situation, we were okay with it, and the homeowner was okay with it. They understood, and so it wasn't a conflict of interest because they agreed that their realtor was also their contractor, which is why we had hired Nathan to be the third party, to make sure that the work was really being done, and we weren't just stroking out $100,000 check and the work and the house is not being finished. So,
Like Nathan said, transparency, be clear.
yes.
Disclose. I mean, that really will save you a lot as a realtor too.
Yep.
If it's an arm's length transaction, you're helping out, just be transparent with them, and that'll,
If there's a way to do it, we'll make sure it's
yeah.
done and done in the
Yep.
right way, with no issues.
Yep.
What is a consultant? An unbiased advocate for the buyer. It's usually a first-time home buyer, a lot of times, I won't say usually, but in this market, it's not always the first time. The eyes and ears of the lender, as I was speaking a while ago, just, they want to have us out there to make sure their interest is taken care of. Mediator, facilitator, quality controller of the project. Whenever the work starts, after closing, they have 6 months to complete it. Usually 3 weeks to a month, the inspector, myself, consultant, goes out and does an inspection of the work that's completed, applies for the draw to the lender sends the check to the contractor if the work is completed. Now, one thing to let your clients know if they decide to go this route is they're in control of everything, the borrower. They control the GC that they choose, they control the money before it's given out from the lender to confirm that the work's done. I had one recently that the guy said, yeah, I'm done. So I was, okay, so I went by the house, far from done. So here I'm like, really, I wasted my time. So I took pictures, I called him on the phone, I said, when you're done, you call me. And, anyway, a lot of times, like you said, you have to make sure that the work is done. I said a little more than that, but I won't go there. But, it's all time and, just communication. And you have some people that just don't try to follow the rules. But what does a consultant do? Assist the borrower in determining the feasibility of the renovation. Like I said, of the feasibility study that I talk about I do. If I do the home inspection, that'll be done for you. So if you go in and you're not even thinking 203K, and you find a house that somebody really loves the location, and, or the house itself, they just hate the kitchen. If we've done the home inspection for you, the feasibility study, I already know the house, I can take my report and transfer that over to a feasibility study, shoot it over to Mark or a GC to get you some real numbers. That's what that's about. Works with the borrower to identify improvements. As I said, I like to walk around the home with them to go over items. Completes the work write-up documents, which goes to the lender to actually go to closing. Conduct draw inspections, which I just explained. Okay. I'm going ahead of this, I'm sorry. The process of getting a 203K mortgage, lender meets with the borrower, identify if they want a 203K mortgage. I'm not going to run through all this. Kayla's already went through it, so we'll just kind of go through that. Any questions at all that we haven't already answered? Any of us will answer questions for you. Yes, ma'am.
So if you're a contractor and you are also an investor and you want to purchase the home under a conventional 203K renovation loan, if they decide to do the work, some of the work themselves,
Mhm.
will that check that that'll take 6 months to complete the work, will that be given to them at the same time? So you'll buy the house and make money from repairing the house? Is that how it works?
Goes to my lender?
Like a master loan?
Yeah, so I'm going to give this example for you, Nadia. So her husband works in the field. He's not a GC yet, but he's working on it. If he buys a house that doesn't need GC-related repairs, can he do them and get paid for them? Is the question. It's kind of the simple, like.
Yeah, simplify it because I'm kind of confused. on
So-
how it works still.
When I gave, so he's working on getting his contractor license?
He has a construction business.
Oh, he has a construction, okay.
But he's not a state licensed yet.
So if he's buying it as an investment and he wants to be the contractor, that would be kind of a fine line, because it would need to be a conventional loan, and it would need to be, we'd have to hire a HUD consultant for sure. Because we would need someone, a third party, that's protecting our interest in the home and the money that we're giving the homeowner who's also the contractor. But it could be done. What was I gonna say to
And then
that?
how long before he could flip it?
I mean, we typically ask 6 months because we don't get paid on it if you sell it within 6 months. So all the work that everybody did, we get, when we sell and transfer the loan, it gets called back on Fairway. So, and that's just any lender will tell you that, even with you, like even if you, but they will take, because the investor that bought that loan will take that money back. They won't pay you.
Okay.
So we ask 6 months. You can sell it. Now, refinancing is 12 months. That's something that they just recently changed guidelines. You have to wait 12 months. But yes, he could be the contractor and the buyer as an investor, and we would have to get it approved from our underwriting. We would just escalate it. It's a case-by-case situation.
Right.
But I will tell you, we'll end up wanting to hire a third party to make sure that the work's been done.
And
Yeah.
so all they need is a 5% down payment if they're buying it as an investment property?
No, as an investment property, it's 15% down.
15%.
Yeah, 15% is the minimum on an investment property.
Yeah.
And the checks are cut to the contractor,
Okay.
not the homeowner.
So understand this, so I'm gonna put a contractor hat on now. So when we say general contractor, so if you change one piece of siding on your home, if you go in and cut a piece of T111 and replace it with a repair, that is required by the state of Florida to have a general contractor to do.
Yes.
Anything change, windows, siding, the only thing that a non-GC can do is trim, paint, anything non-structural. They can pour concrete. But when people get in there, like, oh, I'm going to change all my plugs out. You need a GC to cover that with a lender especially, because they're going to have the building permit to cover the electrical permit. So a lot of people get a misconception, but I'm just changing one piece of siding, not a big deal. That right there is they're breaking the law by doing that. And they could go to jail for practicing a licensed contractor. And it is I believe it's a felony if I'm not mistaken to practice, it's kind of like practicing real estate without a license. I know that Handyman Joe says I can change your siding all day long, and they by all means skilled enough to do it, but they didn't take 3 tests, spend 4 hours in each test and 16 books and 20 years of experience to get the license. They went out yesterday and got a license to go to GC. A little bit different level of skill there. So just be wary when you do stuff. Or these guys are like, oh, I got a contractor that's a buddy. But just vet him.
That's still the worst thing. I do have the one that's going on right now in Springfield, and she's trying to be her own GC whenever she already had a GC buddy that was going to run the project. It's been back and forth. He's quit on her twice. He's come back.
Yeah.
Oh my Lord! It's like, dear Jesus, please, just,
I know.
I just want to finish this and get it done. So it's like, you just. That's why I try to always say, let's get a real GC contract.
So I want to go over this real quick for the contractor side. So when Nathan sends me a project to work on that he's received, this is how my bid scope looks. So I have to go through, I have to fill every single line item out on this entire sheet. And this is like just a scaled down version. This actually isn't the whole thing. We have to understand all the permits required, if they are, if they're not. We have to go through, and each line item I have to bid out labor and materials. So this is why I say every change order, if they change 20% of their flooring, no, we're not going to do these rooms now, and you already submitted this, I have to go back and re-estimate the whole project. Every time one of these changes a week, but this is every single line item I have to go through, and he has mandatories on me. I don't know if it shows on here, but when I'm filling this out, it says mandatory. So if I don't put a value in there, it doesn't do it.
Can the homeowners do the demolition themselves?
Here's how, so each GC is going to be independent. I likely won't let you do it. The reason is because A, you're going to make an absolute mess in a project and blame me for the mess. I'm a very neat demo guy. I do not like hitting drywall and blowing it across the house. That's not how I demo houses. Some people do. I won't let you do most of that stuff because the prep work is the key to putting it back. If they go break 70 tiles that they're gonna keep, and then I gotta go repair those, that just
Yeah,
added.
it's a liability.
Yeah, it's just more work on me. But this, understand, this is, I mean, this sheet keeps going on, and this is an easy one.
Yeah, that was a simple one.
His nephew I'm doing one for, it's like 3 times this amount. So every time it changes, understand, I have to, go in, call my subs, ask the sub what the new cost is because they want to take it. And sometimes they have to go back out. Just be very, very clear. And you said, say one other thing too. Oh, key, do not estimate the cost as a realtor. You do not know, I do not know the cost. I used to not know the cost until I got back in this game. The cost of materials and projects change daily. I can go for one job and painting cost me this, the next job payment up 25%. And it happens still to this day. If you estimate it, your customer comes to me and you're like, you could get yourself in a lot of bad publicity. Let's put it that way.
That's why when they ask me as a consultant, whenever I'm walking around with them, they want numbers, and the feasibility study that I do are my numbers that I come up with. I let them know that these are guesstimates. They are not the numbers, not hard numbers until you get it from your GC and they're confirmed. And I usually try to get 2 or 3 bids, and you choose which one that you like or the numbers that fit your.
And our bids are not likely to be solid because you're talking 60 days later, we might start a project. So I'm very transparent when I work with people. These bids could change a few percentage based on material costs. Your labor costs are going to stay the same on my bids. Your materials will be the only thing that I'll ever change if it goes up on me.
Another reason for using contingency if we have to.
Yes.
Yeah, they don't ever go down, I promise you. I haven't seen one yet.
I mean, a lot of people will tell you, I have cash, I can do this myself. Well, why would you buy the house and finance it and then put 20% down or whatever they're putting down and then and pay for the repairs? Keep your cash, finance the repairs in, because then it's almost like they're spending double, right? Because they're putting, even if it's 5 or 10% down, but they have all this cash, why don't they just put the 5% down or 10% down, but keep their cash? A lot of people want to keep their cash right now because the uncertainty and just what's going on with the economy. So finance it as a renovation. Finance the repairs in. Also, one thing I was going to mention, you might have somebody that's maybe unhappy with their house and they want to sell it and they want to update and upgrade. Well, maybe they can't find anything or they don't want a brand new home because they like their older home and they want to stay in like an older home. They don't want, a house that's in a neighborhood that looks like everybody else's. They can do a renovation refinance. We do renovations loans as a refinance. So maybe you're working with a customer that just can't find something that they like, but they love their home. They want to update it, and maybe they don't have enough equity to update it. We can do a renovation refinance. So that's something to think about too.
Do a lot of those, actually.
Yeah.
I'm glad you mentioned that.
Yeah, so it's not just for purchases, it's not just to help you advertise your listing.
I wonder if they would.
Yes, we do renovation refinancing.
Yep.
Yep. Yes, ma'am.
Does that apply to mobile homes too?
Yes. Yes, that's something new we just added. They're not easy to do, but we'll do them. I laugh because these are the hard loans, right? I say hard loans. There's more involved. It's a process. When you're working with people, professionals that have done it before, that can help you. That's, you don't want to work with somebody that's never done a renovation loan or a contractor that's not really done many construction loans. I gave you a sample bid, how the bid should look. I passed that out and I passed out our contractor profile so you can see when we're vetting the contractor and you're working with your customer, your home buyer, on finding a contractor, you don't make sure they're not hiring somebody who's working out of their dashboard. I say that jokingly, but you don't want to hire somebody like that because they're probably not going to be able to fill that paperwork out properly, timely, or properly. We have to make sure that the repair, the bid is broken out, labor and material. That's a requirement.
Yeah.
And I can't tell you how many times I've had someone hire a contractor and I have to repeat myself and I have to email them. And I do because, but having to repeat myself, I don't like to do that when you have it in writing, but I'll have to tell them multiple times, I need this broken out, labor and material. Or they run out of money.
And because they have to carry money, that's what I'm
They
saying.
might run out of money. And FHA, we give them 50% up front, 50% upon completion. Conventional, we don't do that. we only give them money for the material up front, and we have up to a 5 draw schedule. So they have to front the work, and then they get paid afterwards. So you want to make sure that your borrower is hiring somebody who's financially stable, who's done this a time or two, and who can produce paperwork. And like I said before, Mark's great about that, and I know Nathan also.
It gets a little squirrely.
But I mean,
If you carry 2 or 3 of these jobs at a time, they can.
it makes it smooth. Yeah, I know you have your hand up.
Just a quick question, on the 203, on a mobile home, if they moved it from the original property, do you do that, or hands off?
You
No.
have one?
I didn't think anybody did.
It is something that we have done as an exception, and on VA, we'll let you do it as an exception. You think that of all of the ones, VA wouldn't let you do it, but they do. I have not done one, but I did read in my guidelines recently, because I did have a borrower ask me, or somebody asked me about that, and we will do a VA mobile home that's been moved on a case-by-case situation. We send it to the VA hub for approval.
They have a few of those in Middleburg, so that's why I
Yep.
asked.
I know.
Will they do the older mobile homes up to code? You know, like, FHA requires the footers to be so many footers, and, I mean, so if it's an older one, will these things take care of all those
Yes,
things?
so 1976 is the magic number. If it's older, and as long as it is, 1976 is when Fair Housing established their guidelines of how the foundation is supposed to be properly set up for mobile homes. That's why they say 1976 or newer. If it is older and it is up to the proper standard, and it's all been, the foundation is set up to have standard, then yes, they can finance it. So I know Nathan can attest.
And that's one thing also, the reason to have the engineer certification of the foundation. So if you have one like that, just let us know, because most likely it's going to have that for the lender anyway.
So as far as the insurance companies are requiring now, you know, the older mobile homes, there's a lot of things that have to be changed. Is all that in that inspection that you do? You know, like the plumbing, what is it, pro-butyl?
Polybutyl.
Polypipe,
Yeah, all that stuff.
Well, that would be the home inspection side of it. That's nothing to do with the foundation certification.
Right.
But usually we'll do, the typical inspection for a manufactured home is the home inspection, 4-point, water test if it's on well and septic, which usually they're rural, so they are, and the foundation certification. Usually those are the 4 that usually end up being done on most of those.
You brought up a good point. I heard you say insurance, which made me think of
Yeah, me too.
Thornton. So when you're doing renovation loans, if they're not going to occupy the dwelling for X amount of time, definitely check on your insurance early on, because we had an issue where they might not have been there for 4 or 5 months. Well, insurance is like, no, we're not going to cover the dwelling because you're not occupying it, so we don't know if it's going to flood or burn. You got to understand your insurance before you go into those loans, and if they're going to get into a renovation loan, get to insurance within the first 10 days.
Luckily, I do have a gentleman that I've worked with on these renovation projects. He's an insurance agent. He understands what kind of insurance we need to have. So we had to get a builder's risk is what we did for like the first 6 months. And then after, when they moved in, they just converted to a normal homeowner's insurance policy. Most every single one that I do gets a builder's risk. If you're living in the house, you can get a normal insurance policy, but the insurance has to cover the material. And the agent has to say, has to let us in writing state that they understand there's a renovation going on the property for us to be able to accept the insurance, because what happens is when they don't realize that something does happen and we have to make a claim, and the insurance, if they don't want to pay out because they didn't know there was renovations going on, they can't do that. So we just make sure that they have it in their writing that it will cover material and that they understand there's a renovation. So, yeah. Yes.
Do you have a minimum or maximum for construction loan?
So it's the county loan limit. Conventional, you mean like how much renovation can be done, or how big the loan can be, or both?
The loan.
Okay, the loan, so it's county loan limit. So on VA, it's not, on VA you can go up to like $2 million on a purchase, but not on renovation.
No, without the purchase, just renovation.
It's what, 726 or something like that now, 726,000 for conventional is the max loan amount. And VA and FHA, it's the county loan limit, which is I think 400, I don't know, I have to look it up. It just changed. It's like 400 and something thousand. I can look it up.
Without the purchase of the property?
That's the maximum loan. You can buy a $700,000 house, as long as you put $300,000 down, you can finance it at FHA.
Know what I'm saying? It's like, if I have an investment, I want to renovate it. Can I get a construction loan?
Yes.
What's the minimum?
What do you,
Oh, how much, what's the minimum loan you would offer?
What's the smallest loan you do?
50,000 for a renovation loan? Like-
so
And do you have a maximum?
on the, so the minimum loan amount, the minimum renovation is $10,000. It's not really $5,000, but nothing is $5,000.
Right.
So 10,000. The maximum, it depends on the type of financing you're doing. But on conventional, it's 50% of the total project. So let's say it's a $300,000 house, you can finance another $300,000, so $600,000 total. It's not like a magic number. It's a percentage of the total project. Does that make sense?
Now I'm saying it's like, I own a home, like for example.
Uh-huh.
You own
I just need
cash.
to renovate. I need cash to renovate this, to rehab.
Do you own it outright?
Yes.
Okay.
What's the
How much?
minimum loan you're
The
Can I
getting?
get a loan
minimum
from you? Or-
$35,000 is the minimum loan, mortgage loan.
And you have a maximum? No.
Well, so it's the maximum is your county loan limit.
It's really what your house
Do
is
you
worth.
understand what I'm saying? It's the
That
county
raise
loan
loan.
limit.
Yeah. They'll give you what, is it 80% of loan value on those?
Okay, now you're at, so loan to value on a refinance, it's 95% conventional, and 97.5% FHA, like the maximum loan to value. Is that what you're asking?
Is that what you're saying? So if you're refinancing your house, how much can you pull out of it
So you'd
out of it?
be taking cash out, right?
You're honestly better to do a cash out refi if you own it outright.
Yeah, it's as a cash out refinance, but if the home isn't in the condition where it's eligible for financing the way it is, and you need the renovation component to make the house financeable, it's $35,000 as a minimum, but the maximum is the loan limit, the county loan limit. Does that make sense?
I don't know what the top is.
I know, I'd have to look it up, because Clay Duval, they're all, like I said, FHA, it's like 400-something thousand, and then conventional 726,000.
I mean, I would say hire us to come in and do a feasibility study on your house with you and see what you want done. Then we'll get you those numbers, and then she'll know what she has to work with, what kind of numbers.
Hey, Mark, do you do a design? Or-
We can, yeah, we can do addition designs, new construction. We have an engineer that we hire in, very affordable. You go sit down with him, you design what you want, or he'll come out to your project, depending on what you need. He'll do kitchens, bathrooms, everything you need. We have pretty much anything you want. You want custom homes, we can do it. We're getting into that now, so it's not really our way.
Nice. That's nice.
Yeah, we found an engineer that we like, and he'll do it for us, so that's the hardest part.
That Castellita, I wonder, what area do you service?
You know what I mean?
Yeah.
Anywhere that pays money.
Okay.
I mean, we're gonna do one on the north side of Jax, we're doing one in South Fleming Island, we have one, we just did one in Melrose, so that kind of gives you a
Yeah.
broad spectrum.
That's very helpful.
We'll go with, I mean,
Would you go to Tampa?
we might be going to Boca Grande, so that gives you an idea where we'll go.
Wow.
South of there. Yeah, we do the same thing. Right now I have my 203Ks, done one in Baxley, Georgia, St. Simons, Brunswick right now, Daytona, Lake City, Palatka. So we're all over also, same situation.
I'm just the state of Florida.
She doesn't have to
Anywhere in the
travel.
state of Florida.
She don't have to travel,
Okay,
that's
you're
right.
licensed in the state of
Same thing, I'm licensed in the state of Florida.
She
so
sends us out. Go.
I am only residential though.
I don't have to
do
go to the
commercial.
house, I can finance a house anywhere.
Yeah.
Yeah. So, any other questions? We gotta do the gift cards. Did you all put your business cards in here
I
yet?
think everybody did.
No.
No? Any other
Get your,
questions you can think
pupils
of?
get ready for the
We got
sun
one.
outside.
Any more business cards?
Sorry, that
You
was-
can pick them up if you didn't put one in there
I
yet.
got one.
I'll grab, you got one in there? Anybody else?
Don't draw me yet, you guys don't go.
I'm not, I'm waiting.
Any other cards need to go in there? Who's in there? Hold on. Linda had cards going in.
One thing I wanted to mention to everybody while I'm thinking about it, on May 3rd, the National Director of FHA Consultants whiz on 203Ks. We're doing a 3-hour class over at Landmark Title. I think it's from 11 to 2. I'll get more details out. I've got your card, so I'll send the information out. If you really want to delve into deep of 203K, I recommend joining that event.
Is that CE credit?
I don't know if it's CE or not, I'm not sure, but well worth doing, okay?
And if I could ever answer any questions for any of you, or even be a resource, it doesn't necessarily have to result in, a loan or anything, or I'm happy to help answer any questions, and we're all in this together to help each other. So my card's on the table. My cell number is the best way to get a hold of me. Just text me or call me anytime, and even follow us on Facebook and social media, because sometimes we post things that, that might be a good, useful information to you, so. And I'll tag all of you here, and what wonderful realtors all came and learned. So thank you all for coming. I appreciate it.
Thank you. How many of you guys learned something new today? I did. Next time I hear somebody, the thing I am taking away.